in preparation for the merge upgrade, which will permanently disable the POW consensus process. Ethereum is now experiencing a phenomenon known as a triple halvening, which is touted as occurring once in a lifetime. So what exactly is it that everyone is talking about? Will Ethereum benefit from it? Will Ethereum hit the $5,000 mark after this? Let's find out. Hi there, and welcome to Ethereum Altcoin News. Make sure to hit the like and subscribe button, and also to watch till the end. The transition of the network from mining to staking is going to take place during the forthcoming Ethereum Merge, which is scheduled to take place in the middle of September. This will include the existing Ethereum blockchain merging with the proof-of-stake beacon chain. Proof of work and proof of stake are both mechanisms that contribute to maintaining the integrity and safety of the network. However, proof of stake offers various advantages in addition to these. It is less expensive. It requires a much lower amount of energy, and it makes it much simpler to participate in the operation of the network, all of which make it possible to further decentralize the system and increase its level of security. For those who don't know about the merge, the proof-of-work consensus method that was earlier used in the Ethereum network to validate transaction requests will be replaced with a proof-of-stake consensus mechanism as part of the Ethereum Merge. Following this merge, the Ethereum blockchain would operate at a higher speed and with more efficiency. There should be a significant increase in both the scalability of Ethereum and the effectiveness of its smart contracts. The Ethereum Merge is a mechanism that is very intricate and has been in operation on Ethereum for more than a year at this point. This concept is sometimes referred to as Update Ethereum 2.0. The update implements a few unremarkable procedures to bring the whole of the network up to speed with the most recent consensus process. The merger is also anticipated to reduce the issue of Ethereum by around 90%, which will surely lead to an increase in the price of the currency as a result of stronger demand. The name given to this phenomenon is the triple halvening. Well then, what is triple halving? To answer your question, let's begin by dissecting the meaning of the term itself. Halving is a term that refers to a concept inside the Bitcoin protocol that indirectly reduces the share of Bitcoin distributed to miners by half every few years. This results in deflationary stress and has the effect of slowing down the pace at their Bitcoin as a result of this. Since there is no less Bitcoin available on the market, the price of Bitcoin rises as a consequence. Throughout Bitcoin's history, the phenomenon known as halving has been intimately related to the start of bull cycles in the cryptocurrency market. Therefore, the distribution of Ethereum on Ethereum operates a little bit differently, now under the proof-of-work protocol. It is performed not through mathematical reduction of the miner Ethereum reward, that is, issuance rate, but rather through software modifications that have been approved by the community. According to Etherscan, there are now 6,500 new Ethereum blocks mined per day. This equates to around 13,000 Ethereum being distributed to miners each day, which would be equivalent to approximately $23 million at today's rates. At these rates, there would be around 4.3% increase in the supply of Ethereum per year. To incentivize miners to mine these particular blockchain, one of the primary reasons why the distribution rate is being raised is so that more coins can be distributed. These mining incentives may be thought of as bribes for maintaining the network security, since the operation of Ethereum miners requires a significant amount of energy and cash. Generally speaking, the more miners a network has, the safer it is, since it becomes more expensive to attack the network by taking control of 51% of its nodes. Additionally, the more capital that is awarded to miners every block, the more miners will compete for the block reward. A very simple kind of game theory that seems to have been successful up to this point. Many are excited about the transition to proof of stake, which will transform the Ethereum network from a miner-secured system to a validator-secured one of the most important breakthroughs of the merging. For example, a validator-secured network will result in a drop of 99.95% in the overall energy usage. In the process of being created, validators take in extremely minute quantities of energy. This is because to validate the network, they utilize game theory, which involves both capital and punishment, rather than extraordinary hardware and energy. As a result, the first stage of this once-in-a-lifetime triple halving phenomenon is immediately done. Let's get into some details of it. The first part is an exponential decrease in distribution. Since validators need a lower amount of energy to run, the network can spend less money on block awards to incentivize users to run validators. Because of this, the yearly distribution of Ethereum will drop from 4.3% before the union to an estimated 0.4% after the merge. This is a tenfold reduction in the amount of daily sale anxiety experienced by miners over Ethereum. The second part is EIP-1559, burn after sending. A portion of the fees associated with each transaction will be burned, thanks to the Ethereum software upgrade known as EIP-1559. The third part is the lockup duration. You may be familiar with the term staking Ethereum when referring to the beacon chain, giving some of your Ethereum to a validator so that they may help maintain and protect the forthcoming post-merge network is that this phrase refers to its literal sense. You will get block rewards in exchange for staking your Ethereum with a validator, which will allow you to contribute to the overall safety of the network. So you might be thinking, won't everyone simply unstake their Ethereum right after the merge and dump it? The answer is a big no. You may be asking yourself this question now. Won't everyone just dump their Ethereum as soon as the merging is complete? The answer to that question is a strong no. At the moment, Ethereum withdrawals are not being processed, but support for them is planned to be enabled via a software upgrade that will take place after the integration. This was made possible by separating the complex steps of installing, testing, and deploying the merging itself from those of the withdrawal process. The current practice is for the withdrawal feature to be made available through a software update about 6 months to 1 year following the merge. To recap, Ethereum is undergoing, firstly, the exponential decrease in distribution rate. Secondly, decrease in supply due to the burning of a part of every transaction fee. Thirdly, decrease in available supply due to staked Ethereum being locked before withdrawals are executed. These 3 points connect to complete the triple halving, which is a once-in-a-lifetime sensation. What about the $5,000 mark? Tim Baker's prediction that the Ethereum Merge will likely to be launched in September, triggering a sharp increase in the price of Ethereum. After Ethereum started its first price surge in 2022, the whole cryptocurrency market still had over $1 trillion. Given the current state of the market and the crypto investment community, the highly anticipated Ethereum Merge upgrade is considered to be one of the most biggest upgrades that the crypto market will see. However, predictions surrounding the merge have scared most Ethereum investors who believe that the merge protocol will be yet another failure like Terra 2.0. There has been a rapid recovery following the dramatic market collapse, with Ethereum rising by more than 50% since the announcement. If the merge update goes well, experts predict that Ethereum's price would soar to $5,000. To coincide with the anticipated price surge, the cryptocurrency market is gearing up for the big event. BitMEX's creator, Arthur Hayes, recently forecasted that the price of Ethereum will soon surge, allowing the token to finally cross the long-anticipated $5,000 threshold. According to Hayes, investors have a tremendous window of opportunity right now, since Ethereum is trading for around 70% less than its expected price range of $2,000. Given that the Ethereum Merge is scheduled to go live in September, Hayes believes that the Federal Reserve's new mantra of encouraging growth rather than combat inflation will boost the struggling economy and boost the value of cryptocurrencies. Do you think there will be an immediate price cleansing after Ethereum's triple halving event? Experts have predicted that the release of the Merge update would result in a triple halving event for the cryptocurrency. Given the strong relationship between Bitcoin and Ethereum, it is expected that the Ethereum value would immediately increase in line with Bitcoin's favorable reaction to halving. Let's take a deep dive into the significance of the triple halving event for Ethereum's price increase. When the merge update is released, and the Ethereum network switches to the POS consensus method, the Ethereum supply will decrease by around 80% to 90% through the triple halving of Ethereum. Together, the POS consensus method and the EIP-1599 protocol would significantly slow the rate at which new Ethereum are created in the cryptocurrency system. With this new information, the need for Ethereum is predicted to skyrocket over the next several months. But it is still a prediction. So do your research before investing in crypto because it is a highly volatile market. Don't forget to hit the like and subscribe buttons. Let us know your thoughts on Ethereum in the comment section. Thank you so much for watching and see you in the next video. Kindly note that Ethereum Altcoin News is no financial advisor.